student. Myself, Professor B. are from Siketakur College, New Panvel, Autonomous. Today I am going to take problem number 3 in investment accounting. Now this problem is based on investment in 12% debentures by Mr. Gandhi. So we were in the books of Gandhi investment account. So before starting with the problem, all of you should ready with format of what? Format of 12% debenture, date, particular, nominal value column, interest, cost, date, work important, and which is very much necessary for every problem. Formula for this 3 working note. The first, that you have to find out outstanding interest. So there is a formula for outstanding interest, that interest is equal to nominal value. Whatever the units are there, that total nominal value multiplied by rate. Your rate is 12%. So 12 divided by 100 multiplied by outstanding months from last due date. Whatever the due date was there last, from that last due date, that outstanding you have to calculate divided by 12. Next, while sale of investment is there, in sale of investment you have to find out profit or loss. So while you have to calculate that weighted average cost. How to calculate that weighted average cost? There is a formula, and very simple formula. Weighted average cost is equal to total debit side of cost column minus total credit side of cost column divided by total debit side of nominal value column minus total credit side of nominal value column multiplied by nominal value of unit sold. At time of selling of that investment, you have to find out profit or loss, because on sale either we earn profit or we incur loss. So how profit or cost, whether it is fixed interest or common interest, we have to calculate that. From that we have to deduct weighted average cost, which have been calculated over here, to find out profit or loss. If the cost, that is sales price, is more than weighted average cost, then it is a profit, otherwise it is a loss. So this basic 3 formula are very important to solve the problems on investment accounting. So let us start, read that problem and we will solve that problem. On 1st April 2017, Mr. Gandhi held 2000 12% debenture of rupees 100 each. Rupees 100 each means 100 rupees is a nominal value of one debenture. So every time when you calculate nominal value, quantity multiply your nominal value each of Raghav Limited. Cost being 30,400. So cost is already given. So first of all, Raghav Limited pay interest on 30th June and 31st December every year. See the due date. Due date is a half yearly. Half yearly means first due date is 30th June and next interest due on 31st December. Okay, 31st December. So you have to take care of this 30th June and 31st December while calculating outstanding interest, that formula. Okay. The following other transactions were entered by Mr. Gandhi in the year ended 13 into debentures. Now what are that transaction? We will take one by one, and here they say that you are required to prepare investment in 12% debentures in Raghav Limited account for the year, not in the Raghav Limited, but here you have to prepare in Gandhi account. Mr. Gandhi account for the year ended 31st March 2008, as it would appear in the books of Mr. Gandhi. Acha, okay. So let it be limited. Gandhi value of his investment 30 March was 2,80,000. This market value we have to take at the end. When we close that our investment account, we will see what is cost and market value. We will compare that cost or market value, whichever is lower, that we have to establish. So let us start one by one, day by day transaction. The first is opening balance. Always remember you have to write a opening balance on debit side. So write down here 1st April, date is 1st April 2017. Particular, write down two balance brought down. Nominal value. How much is the nominal value? 2000 multiplied 100. 2000 multiplied by 100. 2000 multiplied by 100. How much? 2 lakh. Okay. So it is what? 2 lakh. Okay. Now we have to calculate interest. So this balance is given on 1st April. Okay. Balance is given on 1st April. And the last due date was 3rd December. 3rd December, 1st April, we have calculate that outstanding, right? So how many months? January, February and March. 3 months. So we have to calculate that interest part 1, working note number 1, to calculate interest. What is the nominal value? Nominal value is 2 lakh. Nominal value is what? 2 lakh. Okay. Multiply by rate of interest is 12, divide by 100. Multiply by outstanding months. How many months we calculated? January, February and March. 3 months. So multiply by 3, divide by. Tell me. How much it comes to? How much it comes to? 6,000. Very good. So right, 6,000. So interest part is what? 6,000. So write down interest is 6,000. And what is the cost? Cost they have already given. The cost is 36,400. So your cost is 36,400. So first day over, opening balance we have recorded. Here important part is nothing but calculation of interest. So interest that we have to calculate up to 1st April from last due date. Last due date was 31st December. So December gone, January, February and March. April will not come because 1st April that we have to calculate. So 3 months. So 3 divided by 12 at the rate of what? 12%. Okay, now we will go for each and every transaction. The first transaction, directly they have given what? Sales. How many units sold? 1000 units sold at the rate of 98 cum interest. 98 cum interest means in this 98 rupees interest included. So when we write that the cost, we will deduct that interest. So first of all, we will record this 1st April. Sales always you have record on the credit side. 1st April. 1st April 2017. by bank, by bank account. What is the nominal value? How many units sold? 1000. So your nominal value is 1000 multiplied by 100 rupees each debenture. How many debenture? 1000 debenture. So 1000 multiplied by 100. How much it comes to? 1 lakh. Now interest, your clear cut that the interest comes to 0 or anything is there. We have to calculate. How many? 3 months का interest आएगा शायद, right? Yeah. So interest we have to calculate. चलो. So working note number 2, we have to calculate interest. Same formula you have to apply over here. What is the nominal value? 1 lakh. So write down 1 lakh rupees is the nominal value. 12% interest. And how many months? 3 months. So last interest due on 31st December. So January, February and March. 3 months. So how much it comes to? Calculate and tell me. 3000. So interest is what? 3000. So I will write that 3000 over here in interest column. Okay. Now please pay attention here. How to find out the cost? Cost means COS. Okay. So here I will calculate. Please pay attention here. How I am going to calculate the cost? You have to calculate total number of debentures. How many debentures are there? 1000. Multiplied by what is the rate? 98. But this 98 is what? Comprise. So it is comprise and that's why we have to deduct interest. So minus interest. How much interest we have calculated? 3000. So here you can write that 3000. So what is the cost of sales? Cost. Sorry, 1000, no? Not 1 lakh. 1000. 1000 multiplied by 98 minus interest. So 95,000. So 95,000 is the cost. So we have calculated cost. This is the sale. So we have to find out profit or loss. So here date you can write in the working note. What is the date? 1st April 2017. So we have to find out. So here cost we have calculated. How much cost is there? Cost is 95,000. So here 95,000. Now we have calculated weighted average cost. So working number 1 or you can write the date of transaction 1/4/2017. How to calculate now? Total debit side of cost column. So total debit side of cost column. Now I will take here the sum of this. So we can make very easily. So total debit side of cost column, that is 36,400. So here 36,400, 36,400, that is the total debit side of cost column minus total credit side of cost column. Now your total credit side of cost column is 95,000. But we will not take this 95,000 because that 95,000 is a transaction for which we are calculating profit or loss. So don't take that transaction ka value. Okay, so here I will take 0. Divide by total debit side of nominal value column. So total debit side of nominal value column is what? 2 lakh. Minus total credit side of nominal value. It is 1 lakh, but don't take that 1 lakh because this 1 lakh is for transaction. So transaction we never include. Huh. Multiply by nominal value of units sold. What is the nominal value of units sold? 1 lakh. So multiply by 1 lakh. How much it comes to? I will take amount over here. 18,200. All of you have calculated. So weighted average cost is 18,200. So selling price is 95 and weighted average cost comes to 18,200. So it is a profit. What is the profit? 76,800. And profit you have to transfer to profit and loss account credit side and investment account. So this profit I will transfer to the investment account debit side. So year 1/4/2017 to profit or loss. To profit or loss. In nominal value column you have to write. In interest column nothing you have to write. But here you have to write. How much you have to write? 18,200. I hope all of you have followed this. Okay? Chalo. Now next one. So next is October, 1st October. But before that 1st October, 30th June is there. Okay? So 30th June pay, we have to receive what? Interest. So we have to receive interest means record that interest on credit side. So here write down 30th June 2017. Interest received means what? Bank. So bank, by bank account under that interest column. Now interest column, remember you have to calculate whatever the balancing figure of nominal value. So here I will calculate balancing figure. What is that balancing figure? 2 lakh minus 1 lakh. Balancing figure is how much? 1 lakh. Last due date we received on 31st December. So from last due date outstanding, January, February, March, April, May and June. How many months? 6 months. So you can calculate that interest by applying the same rule. Third, how many months? Here 6 months. On balancing figure. Balancing figure is 1 lakh. How much it comes to? 6,000. So write down 6,000 in interest column only. Nominal value column 0. cost column 0. Chalo. Now we will record next transaction. What is that next transaction? On 1st October 2017, 1000 purchase 100. No need to deduct what? Interest. Directly you can write in the cost column. So how many debenture? 1000 debenture on 1st October. So write down debit side 1st October 1 10 2017. Write down to bank. What is the nominal value? How many debentures purchase? 1000 debenture purchase. So here 1000 multiplied by 100. So what is the nominal value? 1 lakh. Now we have to calculate interest. So let us start calculating interest. So fourth working note, here same formula. What is the nominal value? 1 lakh. So nominal value 1 lakh. Rate 12%. 12 divided by 100. Multiply by how many months? October. So last interest we have received on 30th June. So July, August, September, October will not come. So how many months? 3 months. So 3 months you have to calculate instead of year 6, 3. How much it comes to? How much? 3000. Right? So interest is what? 3000. Now here, pay attention, when calculating cost, don't deduct interest. We have deducted interest over here because it is a come price. 98 rupees is what? Come price. If you look here, 98 rupees is a come price, right? But here, how many debentures? 1000 debentures. Multiply by, what is the rate? Rate is 104 x interest. So rate is 104 multiply by 104. Bus. Don't deduct interest. So your cost price is 1 lakh 4,000. That's all. Next transaction is again purchase. That is on December. 1st December 2017. Bank. What is the nominal value now? What is the total debenture purchase? 2000. So your nominal value is what? 2000 multiplied by 100. Now interest. Now we have to calculate interest. The transaction on 1st December. So 5th, same formula. Nominal value is how much? 2 lakh. Rate was 12. Now outstanding. So this is 1st December. So June, July, August, September, October, November. How many months? June gaya. July, August, September, October and November. How many months? 5 months. So here you have to take 5 months. How much it comes to? 10,000. So interest is what? 10,000. Now dear student, here 97 is a cum interest. So we have to deduct an interest. So calculate here 2000 debenture multiply by 97 minus interest. How much interest? 10,000. Why we are deducting interest? Because it is a cum interest. Interest included in the price. We don't want that interest included in the price. We want pure cost. So it comes to 1,84,000. Okay. Chalo. Next and the last transaction, that is on 1st February. But before 1st February, there is a interest we have to calculate. So we have to receive interest. So receive interest, that is on 31st December. So write down here 31st December 2017 by bank account. Okay. Interest calculation we have to do over here. Same formula. So what is the outstanding balancing figure in the nominal value? I have indicator here 4 lakh. Why 4 lakh? See here, total of debit side of nominal value 5 lakh and here 1 lakh. 5 lakh minus 1 lakh, 4 lakh. So we have to calculate that interest on 4 lakh. 4 lakh. 12% for how many months? 6 months. How much it comes to? 24,000. Very good. So here I'm going to receive 24,000 interest. Nominal value column 0, cost column 0. Now the last transaction remaining. What is that last transaction? Sale is there on 1st February. So here write down 1st February 2018. 1st February 2018. What is that? By bank. What is the nominal value? I will not take I will write later on, or let us write what is the nominal value. How many units sold? 1000. So here 1000 multiply by 100, 1 lakh. Interest we will calculate. X interest 97 is what? X interest 1st February. So let us find out that the interest. Let us find out the interest. So interest we have to calculate on nominal value 1 lakh. So here 1 lakh, 12%. Now we have to find out how many months from last due date. Last due date was on 31st December, right? Last due date we have received 31st December. December gone. January. February. Is it that the February will come? No. So January. How many months? 1 month. Okay. So here 1 month. How much it comes to? 1000. So write down here interest 1000. Now we have to find out cost. How you will find out the cost? How many debenture sold? 1000. Multiply by, what is the rate? Rate is 97 x interest. So x interest means there is no need of deducting interest. So here multiply by 97. So 97,000. But we have to find out what profit or loss. So to find out profit or loss, first of all we have to calculate, yeah, weighted average. So first February 2018, same formula you have to apply. Total debit side of cost column. So total debit side of column, cost column 3,42,600. So here I will write 3,42,600 minus total credit side of cost column. Total credit side of cost column excluding this transaction. So total credit side of cost column is how much? 95,000 only. So I will write here 95,000. 95,000. Total debit side of nominal value column 5 lakh. So here 5 lakh. Total credit side of nominal value excluding this, how much? 1 lakh. This only 1 lakh. Don't include this 1 lakh. So 1 lakh. Multiply by nominal value of units sold. Nominal value of units sold is what? 1 lakh. How much it comes to? 61,900. Here, first February 2018, cost is 97,000. Cost is 97,000 and weighted average cost is 61,900. 61,900. Profit or loss? Again profit. Profit of how much? 35,000. Cost 97. Here. What happened? Total. 3,43,000. 76,800. Okay. Chalo. 76,800. 76,800. So total 4,01,200. Total debit side of cost column. Total debit side of cost column. How much? 4,01,200. Rest of the thing is right. So so 76,550 weighted average cost. 76,550. So 20,450. That is what? The profit. So profit you have to record on debit side to profit and loss under cost column. How much? 20,450. Here 0, here 0. All the transaction finished. Now we have to close this account. How to close this account? Please pay attention here. Very important. Okay? Very, very important. Nominal value you can close very easily. So here I am closing this nominal value. I will just reduce this so you will understand. So what is the nominal value balance? 3 lakh. So here you can write 3 on 31st March 2018. Buy balance carried down. Okay, buy balance carried down. Now 31st March, we have to carry forward outstanding interest. So we have to calculate interest. Interest has been calculated on balancing figure. On 3 lakh we have to calculate interest. Okay, so here 8. Same formula. What is the balancing figure? 3 lakh. So on 3 lakh we have to calculate interest. 3 lakh we have to calculate interest by 12% for how many months? How many months? Last due date? December. January, February and March. How many months? 3 months. 3 months. So how much it comes to 3 months? 9,000. So outstanding interest you have to carry forward for the year is 9,000. Now you can close the interest column. How to close that interest column? I will find out the difference. The difference is 24,000, right? So 24,000, see here this is 19,000, here 43,000. So 24,000 comes on debit side. So I will write 24,000 over here, see here. And this interest will be transferred to profit and loss account. Finally, this interest on 31st March 2018 transfer to. Now the last and very important part, closing of cost column. Now closing of the cost column, we found the difference is 2,29,650. Please pay attention here. Difference is 2,29,650. And what the market value is given? 2,81,000. Market value is 2,81,000. Which one is lower? 2,29,650 is the lower. So we will keep that 2,29,650 as it is over here. If market value is lower than the cost, then we have to write here market value, and again difference that we have to record as a loss. Okay, we have to record as a loss. I hope all of you have followed, and that is the end of this solution. I hope all of you have followed this. Okay, thank you.